I think we're in a bear market. Happy Tuesday, members of the Altcoin Buzz Army, kicking off with a little bit of levity there. And it's an idea that we're going to explore today. Are we out of the woods? Were we ever in a bear market? Are we now entering a bull market? Bitcoin still remains above $40,000. We'll be taking a look at some of the different variables that are kind of indirect indicators, some of the metrics that we don't necessarily always talk about in support of Bitcoin and by extension, altcoins enthusiasm right now, which is palpably rising. People are getting more excited about it. We've had a couple of catalysts recently in the form of countries like El Salvador, Paul Tudor Jones coming out, billionaire investor, talking about the merits of Bitcoin in this inflationary environment that we find ourselves in. We'll go through a few different examples as well. We'll also give away $50 of Ethereum at the end of today's video. Stay tuned for that. We give away $50 worth of ETH every single day to one lucky winner. Stay tuned. It's going to be at the end of the video. Let's take a look. The market is actually ever so slightly down. It's kind of flat/down versus where we were 24 hours ago. And in this last hour, Bitcoin is slightly down, but we're still above $40,000 as per CoinGecko.com, $40,192 very specifically. So I think it's kind of a decision point right now. Let's see if these levels can be sustained, and let's see if we can go even higher. Hopefully, fingers crossed after all. And speaking at the level of sentiment as we were, here's actually a bit of encouraging news based on some survey data. So apparently crypto investors have been unshaken by recent market sell-offs. And this is a fresh report from today, the 15th of June. So despite the crash, this sell-off I think is a generous term, despite the crypto crash that we've seen, which wiped out a significant portion of the total market cap, yes, buyers are invested in investing. This is on finance.yahoo.com. That's because according to a survey by Voyager Digital, a crypto asset broker, almost 90% of participants plan to invest in more digital currencies during the next quarter. And this survey included responses from over 3,600 individuals at the end of last month, while Bitcoin prices plunged, which is pretty interesting. And at the level of altcoins too, this is what I find interesting. Check this out. Actually, before that, let's read this point. Nonetheless, 7 out of 10 investors surveyed remained bullish when asked about the price of Bitcoin in the coming quarter. The predictions of at least 39% of those surveyed placed Bitcoin's price in the $50,000 to $70,000 range near the end of the third quarter. And at the time of press, Bitcoin pumped to a local high a little bit above $41,000 with support levels at $38K. Here's what I find really interesting. Younger investors, at the end of the article here, remain bullish on the long-term trajectory of not only Bitcoin and altcoins, but other developments within the space, such as non-fungible tokens, NFTs. And as crypto continues to penetrate the mainstream markets and media, only time will tell. Yes, of course, if we do, in fact, enter this prophesized bull market that they keep talking about. What I also found very interesting is that according to another recent survey, this one conducted by CNBC, apparently half of millennial millionaires, or nearly half of them, have up to a quarter of their wealth, so 25% stored in crypto assets, which that's a big chunk, and I'm not saying that's right or wrong. Look, I have more than a quarter stored in my crypto assets in terms of net wealth, so it's going to, depend on the individual. But you think of what Paul Tudor Jones came out and said the other day, 5%, is going to allocate 5% into Bitcoin. That's up, by the way, from 1%. So 5% sounds kind of like a big figure to most people. And yet almost half of millennial millionaires have 25% or more in terms of cryptocurrency assets, altcoin, Bitcoin representation. That's quite something. So those are trends that I think are kind of leading indicators as far as what's to come. I don't see that changing. I don't see that number going down in a year, in 5 years, in 10 years. That bodes very well for this space, of course, over the long term. Let's take a look now at some other metrics here. We're on decentrader.com. This is from a few days ago, so some of this is slightly outdated. We don't necessarily have to look at all of this. I will say that this so-called death cross that people have been talking about, that's upcoming now, within, a couple of weeks, 10 days or something, it looks like that's been offset, like that's been pushed back a little bit, which is good to see. However, we have some other indicators here, some of which are good, some of which are bad, something worth talking about. Okay, specifically here, let's talk about on-chain active address sentiment. And in fact, it's an indicator that you may have never heard about, but it's something that is worth examining. An on-chain indicator yesterday triggered an oversold signal suggesting that Bitcoin may soon be ready to turn around and move to the upside, which is something that we've seen since this article's publication. I believe it was on the 11th or 12th of June. It is the active address sentiment indicator, which can be viewed here. Let's take a look at this for just a second here. We're on decenttrader.com. So this is the active address sentiment indicator. What does it mean exactly? Well, it compares the 28-day change in price with the 28-day change in on-chain active addresses. And in doing so, it is able to show whether the price is over or undervalued relative to user activity on the Bitcoin blockchain. The change in price is shown by the orange line, and change in active addresses is shown by the second band of gray lines with green and red dotted lines on either side. Okay, so what does it mean? Well, when change in that orange line is below the active addresses change band lower boundary or the dotted green line and moves back up into it, we get a bullish signal. Two notable times when this happened previously were shortly after the 2018 bear market bottom and shortly after that Friday the 13th, that infamous event, March 13th, 2020, the COVID crash, the COVID scare. So we received the same signal yesterday suggesting that Bitcoin price was oversold. We've been talking about this the entire time. You can look at other indicators such as RSI to suggest that yes, Bitcoin was heavily oversold. In this case, relative to active addresses on chain, and could now be ready to bounce back over the coming weeks, hopefully. Here's another one, a bit of an indirect indicator that you may not have been previously following. Maybe you've never heard of it at all. SOPR. That's on-chain selling at losses is reducing. So SOPR, spent output profit ratio. This shows whether or not Bitcoin wallets are selling at a profit or loss on a given day. So when a price drops rapidly in bull markets, we see increased selling where wallets have to sell at a loss. This is shown by the green bars on the chart below. After the crash, we saw sustained loss selling, which is never a good idea, over the last couple of weeks, but this is now starting to change. We're seeing some signs that SOPR, spent output profit ratio, is resetting, with the last couple of days showing that on average, wallets are selling at a profit. Why you'd ever sell at a loss, I don't understand. Unfortunately, I think it's a suggestion that, yeah, people are over leveraged and maybe they have no choice. That's unfortunate, but don't sell at a loss, guys. And of course, this is a familiar metric here, but the stock to flow, or the S2F divergence. At the time that this was captured, we did note, in fact, that yes, it's certainly deviating from the stock to flow model, as you can see here, deviating below where ideally we would like to be. But, look, deviations have occurred in the past. They've occurred in the past to the downside. They've occurred in the past certainly to the upside as well. So this is not the most rigid of predictor models. This is the kind of thing where you do have some flexibility both ways. It's an interesting site, guys. decenttrader.com. Again, slightly out of date, but to their credit, they were predicting a lot of the metrics and a lot of the movement that have now resulted in an upswing for Bitcoin and the totality of the cryptocurrency market. So check it out. I'll link to that in the description below. Of course, we've been getting some negative news. There's always FUD to counterbalance the positive. That has come in the form of G7 discussions, but this is already a week old. This is nothing new. So I would like to think that we've been able to weather this storm. We did see some talk of crypto regulation out of the G7, but it was kind of, not that it was hearsay, but it was the kind of thing that we know that they were discussing crypto and crypto regulation in the context of these ransomware attacks, but nothing too bad has come out of that. All things considered, I'd like to say that we've now, as the G7 is wrapping up, we've kind of weathered this storm pretty effectively, which is nice to see. Okay, now there's this other consideration that we have to talk about in terms of, I guess this actually relates back to stock to flow, but Bitcoin in terms of patterns following halving events. As you guys know, BTC had its halving event in May of last year, May 2020. That was the reward halving. Wrecked capital here with this observation from a couple of days ago. The BTC halvings in blue occur in the year prior to a new candle, or candle 1. And candle 1 is where Bitcoin experiences the most explosive growth. reliably and historically speaking, candle 1 is where we see the bulk of the bull market activity. Whatever the FUD towards Bitcoin is right now won't change the long-term effect that the BTC halving has on Bitcoin's price. Let's blow this up and take a bigger look at it here. As you can see, we're taking a look at, in the context of halvings, the cycles in terms of years that follow those halvings. You can see this fourth year started on the 1st of January 2020. We're now basically in this next first of 4 cycles here. And based on historical precedents, and this is all based on time since halving, it's very simple. You can see here that we're in this number 1 candle that really has only just started. These are year-long candles, and so we still have a good 6 months plus of candle number 1 here in which to experience growth, in which to watch for upside price swings in the price of Bitcoin and the price of other cryptos, of course. It's, again, history is no guarantee of future patterns and future behaviors in terms of Bitcoin's price. History doesn't necessarily repeat, but it does rhyme. And so there is this suggestion that, look, just take a look at the previous first year cycles, first year candles, and things will probably work out pretty well. From another perspective here, in, I suppose, a totally different line of work, we have Jurian Trimmer. He's the director of global macro Fidelity tracking markets, and he's also helping people break through the clutter. Take a look at what he has to say. In my view, it looks like the bottom is in, and he's comparing the price of Bitcoin to some other familiar metrics here, GS retail favorites. So comparing the Bitcoin technicals to GS retail favorites. Daily data, you can see the source here is courtesy of Bloomberg. So taking a look at what many have dubbed this Wyckoff distribution here, you can see some actually very similar patterns and price movements when relating it to other assets, in this case GS retail fave. So taking a look, he's suggesting that we are now in the midst of this failed 5th double bottom, and that once we return to this neckline resistance, which will probably be in the upper 40s range, I suppose, upper 40,000s, maybe 50,000 or so. Once we surpass that resistance, that's when it'll kind of be all clear, and we'll be able to confidently kind of put our chests out and declare that we are in fact back in the bull market. We're back in the driver's seat. It's possible, again, just because GS retail faves had a similar pattern here. BTC is its own beast, but even going back, wow, it's impressive. Going back many months, you can see the similar peaks here that are expressing themselves, similar peaks and troughs, and this is perhaps where it starts to break down a little bit. It's not really very similar here, but really since November or December of last year, I'd say, so December, winter 2020, we've had almost direct correlation between the movements here. This pattern, this wedge that's forming, is a little bit different from what we saw in GS retail faves, but if anything, I think it would suggest on the whole that we're due for some upside correction. Again, we've been oversold. There's different indicators that you can look at, different metrics to suggest that we are more oversold than we ought to be. This is just another piece of evidence, I would argue, making that point. On the subject of what's happening in the news, guys, we're not going to go over this right now, but I'd like to direct you to altcoinbuzz.io. We are, in fact, covering all that's happening right now in the DeFi space, which is heating up. It's still possible, once kind of this bull market does resume, it's still possible that we see a mini bull market or a DeFi, a summer DeFi bull market round 2, as we kind of saw late last year for all kinds of DeFi projects. There's a lot going on now in terms of Polygon. They've partnered, in fact, with OKX. Polygon, Matic, of course, is the ticker, is up to big things. And there's a lot of other updates here, 9 other updates, in fact, that you should check out if you're into the DeFi space, if you want to take advantage of the latest information. I'll link to this in the description below, but you should also be checking out our website, altcoinbuzz.io. It's also being covered here on coindesk.com. DeFi projects continue flocking to layer 2 solution Polygon. No doubt it's at the top of our list for that reason. Polygon is in very good shape and very good company right now, and we're excited to see what's going to happen to it once things, again, kind of break out of this price funk that we've been experiencing for the last month or so. Check out as well our Polygon Matic price prediction on altcoinbuzz.io. With that being said, guys, I think it's time now for our giveaway. It's time to give away $50 worth of Ethereum from yesterday's video. Yesterday, we both had a published video as well as a live stream. So I'm going to take the first of these two videos that we put out. That's Paul Tudor Jones there. Let's mute him with respect for just a second. But Paul Tudor Jones talking about, I think, in many ways, justifying himself as the new Elon Musk or so of this space, which is great to see. Now, you guys, as a reminder, in order to be eligible to win $50 worth of ETH, number one, you have to like the video. 116 of you liked the video. You got to comment on the video with the letters ETH or the word Ethereum. And number three, you have to subscribe to Altcoin Buzz News. Let's go ahead and take the URL from this video, copy that, take that over to Raffle Dash. And basically, as long as you're not a previous winner, that's what makes you eligible, as well as those three other criteria that I mentioned. The winner of today's Ethereum is William Akuf or Asuf. Awesome. Fantastic job, dude. ETH. William, you qualify, my man. Congratulations. Please go back, William. Find your comment in yesterday's video. So in this video that we were looking at just a moment ago, go back, find your comment, this one right here, reply to your own comment with the Ethereum address to which you would like us to send you your $50 worth of Ether. Hey guys, it is that easy, so you may as well participate and at the same time help us grow, right, as a channel. So that's about it for today, everybody. Do be sure you're following us on all the regular social media channels. That includes Twitter, that includes Instagram, that includes Facebook, that includes our Trade Signals Telegram group, by the way, which I haven't mentioned in a little while, but not financial advice. However, if you'd like to join an informed discussion, check us out on the Trade Signals Telegram group. I always pin that to the top of the comments section below. You can check it out there. Just like that Trade Signals group, none of this is financial advice. But best of luck, guys, if you do choose to invest. Let me know whether you think we're in a bull market or a bear market right now. You can call this a mini bear market, I suppose, that we've just experienced for the last month. Maybe arguably, yes, we've been in a bear market, but it's been a very confined one. I tend to think of bull markets and bear markets with kind of like larger resolutions, so like over the course of a year, and that's why I've been stubborn and I've said, no, of course we're not out of a bull market. We're not out of a bull market just because we've experienced 1 month or whether it's 2 or 3 months of bear market activity. I think of it over the course of a year, and I think that, in my opinion, the bull market, for some of the reasons that we just discussed, is still intact. So let me know whether you guys agree, whether you think we're bullish, we're bearish right now, why or why not. Keep checking out the website. As always, altcoinbuzz.io. Stay safe, everybody, on this Tuesday. Best of luck if you do choose to invest. And as always, we hope to see you again soon in our next video. Take care.